Yo! Today we're about to drop some serious knowledge bombs on ya. Welcome back to Tool Scroll, your ultimate finance guide for all the cool cats out there. We're gonna check out these 10 mind-blowing ways to finance your crib that you probs didn't even know were a thing. So buckle up and let's get this party started. Alright, listen up peeps, I'm about to spill the tea on a genius move called seller financing. Picture this. You're on the hunt for your dream pad, but the banks ain't giving you the dough you need. No worries, fam. With seller financing, the seller of the house becomes your personal loan shark. They hook you up with a loan to snag the property, and instead of making those monthly payments to some mortgage lender, you slide the cash right into the seller's pocket. It's a total win-win if you ask me. Check out the epic story of Dennis Shershikoff and Natalie Backman. After months of hardcore house hunting, they couldn't believe their luck when they stumbled upon the perfect crib. And guess what? It was a freaking steal, listed at just 90 grand. Dennis had managed to save up a cool down payment of 20K, but getting a solid mortgage turned out to be a major struggle. It was September 2022. A total nightmare in the mortgage market. Interest rates had skyrocketed from a chill 3% to a whopping 7% range in just a year. Nationwide, borrowing money for a crib became 70% more expensive. But hold up, here's where things get lit. Dennis and Natalie's real estate agent dropped a mad, unconventional idea on him. They suggested owner financing, and you won't believe what happened next. They had a chat with the owner, convinced him to lock in a sweet 6.5% interest rate on a 30-year note. They straight up convinced the seller to pocket the interest that would have gone to the greedy old bank. Talk about a power move, am I right? Alright, let's dive into the next big thing, rent-to-own vibes. This option is perfect if you ain't ready to commit to buying but want to dip your toes in the water. You can rent a dope place for a set period, with the option to buy it when the rental term is up. And here's the sickest part. A chunk of the rent you pay during the rental period goes towards the purchase price. It's like flexing on your down payment game while chilling in your future crib. So, we got Jim and Jane, this rad couple who decided to rent a place for 2 years with the chance to buy it later. They agreed to drop $1,500 a month on rent. And guess what? $300 of that cash went towards the final purchase price. When the 2-year term ended, they took up their option and snagged the crib for the agreed-upon price. Talk about making moves, fam. Now, if you're open to borrowing cash from the fam, then family loans might be your jam. Sometimes those traditional mortgage lenders have all these crazy requirements that are a pain to meet. In those situations, turning to your fam for some financial love can help you kick open the door to homeownership. Just remember, keep things legit and professional, so your family relationships don't take a hit. Here's Sarah's story. She wanted to buy a place, but her bank wouldn't give her the green light for a traditional mortgage loan. So, her awesome parents stepped in and offered to lend her the cash. They set up a proper loan agreement with a repayment schedule and an interest rate. Sarah made her monthly payments like a boss, and eventually she even refinanced the loan with a regular mortgage lender. That's how you hustle, peeps. Alright, let's talk about the next dope option, co-buying. This is when you team up with your homies or fam to buy a place together. By pooling your resources, you can split the costs and responsibilities of homeownership. It's like having built-in roomies and sharing the financial load. Plus, it's a rad way to strengthen your bonds with your squad. So we got Mark and Steve, two besties who decided to join forces and buy a crib together. They each dropped 50% of the down payment and split all the costs like mortgage payments, property taxes, and maintenance. They even created a co-ownership agreement to outline their roles and rights as co-owners. Talk about squad goals, right? Now, if you're all about flexibility and chill qualifications requirements, private mortgages might be your jam. These are loans offered by individuals or companies outside the traditional banking system. These lenders often have fewer strict criteria, making it easier for you to score that loan. Just do your research and make sure you find legit lenders, my peeps. Check out Tom and Susan's story. They couldn't qualify for a traditional mortgage due to some credit issues. But guess what? They found a private lender who was down to hook them up with a mortgage that had way more lenient requirements. With the help of that private mortgage, Tom and Susan were able to buy their dream crib. Dreams do come true, y'all. All right, brace yourselves for something mind-blowing. Crowdfunding. Fam! Yup, you heard it right. Some peeps out there have turned to crowdfunding platforms to gather that sweet moolah for their down payment or other home purchase costs. It's like rallying up your crew and the online community who believe in your dream of owning a crib. It's all about being creative and modern to get those funds flowing. Let's peep John and Mary's story. They were all about that crowdfunding life, so they created a campaign to raise money for their down payment. They shared their story, goals, and dreams with their peeps, fam, and all their followers on social media. And guess what? They managed to gather enough cash to cover that down payment and even the closing costs. Talk about a supportive community, right? All right, let's dive into the world of bartering, my peeps. In some super rare cases, you might find property owners who are down to trade goods or services for a chunk of the home's purchase price. Just imagine offering up your mad skills in home renovation or landscaping in exchange for a sweet discount. It's an out-of-the-box approach that can totally work if you find the perfect match. Check this out. We got Joe, a pro landscaper who found his dream property. But get this, instead of just paying the full price, Joe negotiated with the seller. He offered up his epic landscaping services in exchange for a portion of the home's purchase price. And you know what? The seller was totally down for it. So Joe used his skills as part of the payment and snatched up that crib. Talk about thinking outside the box, right? And let's wrap it up with a shout out to the lease option magic. It's kind of like renting a place, but with an epic twist. So you lease the property with the option to buy it later at a set price. It's like taking that house for a test drive before fully committing. This option gives you the flexibility to see if the crib fits your vibes before making a long-term commitment. It's all about keeping your options open, my friends. Let's peep the story of Mike and Carol. They decided to lease a crib with the option to buy it later at a predetermined price. They paid a premium on their monthly rent, which went towards the final purchase price. And when the lease term was up, they exercised their option like bosses and snagged that property at the agreed-upon price, making moves and keeping it flexible. So, there you have it. A sick lineup of totally offbeat loan options to help you flex on the whole home financing game without getting trapped by those basic traditional lenders. But hold up. Before you dive into any of these alternatives, you gotta do your research, evaluate your cash flow, and hit up the experts to make the dopest decision for you. Stay woke and chase those dreams like a boss. If you're vibing with our content, smash that like button and subscribe to our channel.